Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is May 15th, 2025. It is episode 118. On today's show, Bitcoin traders' evolving view of Bitcoin's role in every portfolio bolsters $100,000 support. Money printer goes brum. Yeah, Arthur Hayes thinks it's coming and Bitcoin will go nuts. We are going to go through some Bitcoin technical analysis. As always, try to instill some financial literacy. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I am your host, Nick Toka. Let's get right into some Bitcoin technical analysis. Things are going pretty much sideways for the entire day. Bitcoin right now up 0.75% to 104,000 even. Ethereum down 1%, 2564. Solana down 2%, 171 bucks. XRP down 6%, $2.36. Doge down 3.5% at 22 cents. Looking at the daily crypto bubbles, we've got pretty much everything in the red. But if we go over to the hourly, we see that almost everything is in the green. So things hopefully are making a turn for the better. Taking a look at the weekly, we'll call it 85% in the green, including ETHFI up 95%, Peanut the Squirrel up 50%, Syrup 40%, Cato 38%, Baby Doge up 19%, Rune up 38%. Zooming out to the monthly, about 95% in the green for the month. This is a great sign for the crypto industry altogether. Taking a look at the total hash rate for Bitcoin, continuing to come down a bit, currently at 866 billion terahash. Looking at the M2 money supply growth globally, we've got the 21 central banks, top 21 central banks, and if we zoom in a little closer, as usual, we are going to take note to how closely the Bitcoin price follows the M2 money supply. Let's zoom in a bit, and we can see even better how closely these two follow each other. And right now, we are seeing that the Bitty is going about 45 degrees, but the M2 is going about 80 degrees vertical. So hopefully, we're going to see Bitcoin price follow that trend of the M2 coming up shortly. Crypto and specifically Bitcoin market cap currently sitting at $2.065 trillion, Ethereum $310 billion, XRP $139 billion, Solana $89 billion, Doge $33 billion, Cardano $27 billion, Tron $26 billion, Sui $12, make that $13 billion, Chainlink $10 billion, and AVAX also just under $10 billion. Total market cap is sitting at $3.27 trillion with Bitcoin holding. Actually, they're back up again, 63.2%, Ethereum 9.5%, and XRP 4.25% of the total crypto market cap. Crypto Fear and Greed Index shows us we are currently a 70 in greed. Yesterday we were 73 in greed. Last week a 65 in greed. There are 1,063 days left until the next Bitcoin halving in 2028, with 153,111 blocks until the halving. Total assets by market cap globally. Gold losing market cap again, now under 22 trillion to 21.8 trillion bucks. Microsoft 3.3 trillion, Nvidia 3.2 trillion, Apple 3.1 trillion, Amazon 2.1 trillion, Bitcoin 2.055 trillion, Google in the number 7 spot, 2 trillion, silver 1.8 trillion, Saudi Aramco 1.6 trillion, and Meta Facebook 1.6 trillion bucks. You can currently get 961 satoshis for one fiat US dollar. And the US national debt sits at 36 trillion 854 billion, meaning each U.S. citizen owes $107,648, and each U.S. taxpayer owes $323,050. Department of Government Efficiency clock shows us Doge has saved U.S. taxpayers $435 billion, equaling $3,876 per U.S. taxpayer, which is about $1,000 a month if we do the math and kind of go backwards on it. $1,000 a month. It's $1,000 you didn't have last month, so pretty damn good. Now, a Bitcoin trader's evolving view of Bitcoin's role in every portfolio bolsters $100,000 support. Spot ETF inflows and the options skew highlight growing investor confidence despite macroeconomic headwinds. Bitcoin has struggled to break over 105,000 since May 10th, leading traders to question whether the bullish momentum has faded. Although Bitcoin managed to reclaim the 104,000 level, demand for leveraged long positions has dropped sharply, as indicated by the decline in Bitcoin futures premium. On May 14th, the annualized Bitcoin futures premium peaked at 7%, but then fell to 5%, which is near the neutral to bearish threshold and matches the level seen 4 weeks ago when BTC traded around 84,500. This decline in demand for leveraged bullish positions appears to be linked to broader macroeconomic uncertainty, since Bitcoin's price has been closely following movements in the stock market. The S&P 500 futures reversed early weakness on May 15th, coinciding with Bitcoin's rebound from 101 to 104,000. Investors seem more confident that the U.S. Treasury will be compelled to inject liquidity after Federal Reserve Chair Jerome Powell warned that supply shock could keep interest rates higher for longer than expected. Signs of economic weakness have also emerged. The U.S. Bureau of Labor Statistics reported that April's producer price index fell 0.5% from the previous month, while economists surveyed by FactSet had anticipated 0.2% rise. According to Reuters, investors' limited risk appetite is also influenced by ongoing global trade tensions, as the U.S.-China tariff agreement remains only a temporary solution. Demand for fixed income has increased, with the yield on a 10-year U.S. Treasury dropping to 4.5% after reaching 4.55 on May 14th, reversing the previous week's trend. Historically, Bitcoin tends to perform better when government bond yields are rising, as the signals reduced confidence in the U.S. In the Treasury ability to manage its debt. So Bitcoin's rally to 105,000 hinges on macroeconomic trends. To assess whether traders are simply avoiding leverage or actively betting on a price decline, it's helpful to analyze the Bitcoin options demand. Typically, periods of bearish sentiment push the BTC Delta skew indicator above the neutral 6% threshold. Contrary to expectations, Bitcoin put sell options have been trading at a discount compared to the call buy options, signaling strong confidence in the Bitcoin $100,000 support level. However, the optimism seen on May 14th has faded, with the indicator now at neutral at -4. Since Bitcoin's price has closely mirrored the U.S. stock market, the chances of breaking above 105,000 depend heavily on macroeconomic developments, such as trends in the U.S. Federal Reserve balance sheet and recession risk. Notably, Bitcoin's high correlation with the S&P 500 rarely persists for more than 2 months. Net inflows of $320 million into the U.S. Bitcoin exchange traded funds on May 14th point to an ongoing institutional demand. This suggests that investors are gradually shifting their perception of Bitcoin from a risk-on asset to a non-correlated instrument, which may reduce the likelihood of a sharp price correction, even in the absence of strong leveraged bull positions. So we've been talking about it for quite some time. Lots of institutional demand. No matter what the retail buyers are doing, the institutions just keep on buying, and it doesn't matter what price they're paying. They don't give a shit because they know that the price is going to the moon, baby. So it's kind of nice to see that the institutions are coming in and still buying. It is a bit of a shame, as we saw yesterday, that the retail investors are selling all of the Bitcoin and the institutions are buying all the Bitcoin that they're selling. This is the best case scenario for companies like BlackRock, all the big people who don't need the money. These are the big beneficiaries here. And guys, I would recommend Bitcoin is not a short play. And I don't mean that in terms of shorting it, when you buy it, anticipating the price to go down. I mean in terms of a time horizon. People are playing this thing like it's some kind of day trading stock, and I don't look at it like that. I look at it like a long-term investment. I don't see any 60-80% downturns in the market currently. This could certainly happen after the cycle peak. But right now, I just see bullish signs. Everybody's buying Bitcoin. All the people with the money, they're buying billions of the stuff. And retail investors who own, 0.0 something, 0.1 or under, are dumping it. Because I guess they're happy. They made, it went from 75,000 to 100,000. Hey, I made my money, and they made their 20% and got the hell out. Whereas the institutions who can afford it, who don't need their money, they're sitting there and they're just, it's a waiting game. It's, HODL. This is supposed to be, the HODL game is supposed to be what the retail guys are doing. And instead, the institutions and the governments are flipping the playbook right on them, and they're the ones that are buying and HODLing. What we're going to see, and this is a continuation of the last story, and it's very, very bullish for Bitcoin coming up soon. It plays right into our M2 global money supply analysis that we did about 5 minutes ago. And the money printer goes brrr. Arthur Hayes thinks it's coming, and Bitcoin will go nuts. The money printer is already going brrr. We saw that. But he's talking huge influx of money, and in fact the last story said there's going to need to be liquidity, which means they're going to print money, right? The feds. Bitcoin is the perfect and only lifeboat, crypto entrepreneur Hayes has argued. Arthur Hayes is at it again, this time predicting that Bitcoin's price could soar to $1 million by 2028. The former BitMEX boss Hayes, whose consistent bullishness has been well documented, made his latest lofty prediction in a 7,000-word blog post that touched on economics, politics, wealth, philosophy, and included a feature photo on musician Lizzo. It's also worth noting Hayes described his short-term projections as pretty shit last year. Hayes argued that the biggest cryptocurrency could surge due to an increasingly favorable macroeconomic backdrop, including a likely outflow of foreign investment and devaluation of the dollar, foreign capital repatriation, and the devaluation of the gargantuan stock of U.S. Treasuries will be the two catalysts that will power Bitcoin to $1 million sometime between now and 2028, he wrote, timing his prediction to the next presidential election when a less crypto-friendly president might be in office. Maybe by some stroke of divine intervention, the American public is ready to accept the monetary hangover for the profligacy of the last century and extinguish the rotten credit destroying their society. Hayes wrote, "Therefore, the time is now to make hay while the Sun King takes a shine on Bitcoin." Hayes, who received a pardon from the U.S. President Donald Trump after having pleaded guilty in 2022 to violations of the Bank Security Act, wrote that Trump won't stick with tariffs, instead pivoting to capital control, and this will scare investors who Hayes believes will flee the U.S. with their capital. As a result, the U.S. Fed Reserve will print money to make up for the capital leaving the U.S., and that doesn't go until Treasuries, he wrote. It's the same answer as always, wrote Hayes. If the foreigners won't supply dollars, the government will by using its printing press. Trump started a global trade war shortly after taking office, imposing particularly harsh tariffs on leading trade partners, China and Mexico. The policies unsettled investors, leading to a sell-off of crypto and other risk-on assets. These markets have subsequently recovered as Trump scaled back his policies, but foreign investors remain unsettled, prompting them to look for a better opportunity outside. Trump will likely shift policies as a result, and Bitcoin will ultimately benefit. Hayes maintains, Bitcoin is the perfect and only lifeboat for global capital that must leave America and elsewhere, he wrote. Hayes has previously argued that Bitcoin would end up doing well due to American monetary policy of printing cash. The crypto market did well and surged during the COVID-19 pandemic when America's central bank dropped interest rates to zero and flooded the country with the new greenback by printing more money. So there's a prediction that the money printer is going to go burr, and the money printer is going to turn on maybe like never before. If the money printer turns on, and we know it has, but we're talking big money printing, and the interest rates come down, which we've talked about many times, they will have to come down because the U.S. needs to refinance $9.6 trillion of its debt this year. I believe it's in September or October. So if the interest rates aren't low by then, the U.S. is pretty much screwed in terms of paying a shitload for their debt repayment because they'll have to pay it at a higher interest rate. So it's almost a certainty that these interest rates are going to come down no matter what Powell tells us, every month in his meeting. Eventually, the rates are going to come down. Now, we have seen inflation come down less than expected in this last report. So I anticipate next time Powell comes out, he might not say he's concerned about tariffs this time around. He might, in fact, say, well, because of a cooling economy, we're going to have to drop interest rates. So I fully expect that if by the end of this quarter the economy has shrank again, that is a technical indicator of a recession. So if there's a recession, he's going to have to come in and lower the interest rates in order to stimulate the economy. So I do anticipate at latest July, the interest rates are going to come down. So at that point, once interest rates come down by anything, 0.25%, all risk-on assets are going to hopefully go through the roof. I also anticipate that there's going to be some continual good news from Trump. First it was the tariff thing, and markets tanked like never before, and they're relying on every word that Trump says. I mean, it's a bit ridiculous. So we're not even looking at companies' valuations anymore. We know that they're all completely overvalued at a 21 price to earnings ratio, 25 to 1, where traditionally we're talking about between 10 and 15 PE ratio. So way overvalued. Some companies are way beyond that too, into the hundreds and even 1,000, due to future speculation. And this company is going to do great. Tesla is a great example. People are betting big that their autonomous vehicles are going to be massive in the industry, and specifically in the industrial industry, and not just for residential people driving around anymore, but in the taxi business, in the trucking business. So that might be reasonable to overvalue a stock like that. Quite frankly, probably the best inventor of our generation. I'm not too surprised, but there's other stocks that are way overvalued as well. And, when the next word comes out of Trump's mouth, these things move, whether it's positive, whether it's negative. Now, I feel like most of the negative, if not all the negative news, has already come out. And now it's going to be smooth sailing on the upside in terms of positive financial news for the States and globally. Once we see this, war kind of wind down around the world, I think that's going to be a positive thing for the biddy. Once we see the interest rates come down, very positive thing for the biddy. Once the money printer starts to print like mad, also very, very positive for the biddy. I do anticipate that these three factors might create the perfect scenario for Bitcoin to really skyrocket in the coming months toward mid-year, really in the next few weeks. If we go back to our M2 money supply and are zoomed in, we see that the M2 global money supply is just vertical here, right? And generally, if we go and we follow this 60 days to 90 days after, you see a very, very strong correlation of, basically just move this pink over by 60 days and overlap it, and we pretty much see exactly the same. Here's the head and shoulders pattern, dip followed by a jump, followed by a dip, dip followed by a jump, followed by a dip, and then we go into this mega increase of liquidity on the global scale. Money printers going like mad, and this also should translate into biddy. Instead of going, this 45 kind of 30-degree angle, meanwhile the M2 money supply is going up like an 80-degree angle. So I wouldn't be overly surprised. In fact, personally, I am looking at this very close correlation between the two, and I'm anticipating a pretty big jump coming up soon, and really a normalized Bitcoin 4-year cycle as it has been historically. And if we go into very quickly, before we wrap up here, if we hop into the biddy and go to the all-time chart, we'll see, the year after the halving. It's the halving in 2016. The year after the halving, we've got our cycle peak December 12th, December 19th. The year after the halving in 2017. Then we've got, followed by a lull the year after, followed by the next cycle peak in 2020, Bitcoin halving cycle, I should say, and the cycle peak in 2021, going into November 9th of 2021. And I anticipate a very, very similar kind of scenario here. Right now, when we look at this portion of right where we are right now in the past couple months, I'm seeing this right here, right where the mouse pointer is showing. Potentially it could even be this marker. right? But I feel like we definitely are not at the cycle peak. Going through the historical, where we should see technically about a 5x, a 3x to a 5x from the price right from the Bitcoin halving price. So we go to 2024, April of 2024. April of 2024, it was exactly 420. I remember they were burning all the ganja on April 20th. So here we are. Very, I'm not going to get closer than that. April 16, 2024, the price at 64,000, we'll call it. So if we go 3x from there, 64,000 times 3x, 192K. And if we go 64 times 5x, 320. So this goes right back to what my personal predictions have been realistically. I know people are calling for 500,000. People are calling for $1 million Bitcoin this cycle. I've always kind of been in between this, 190, 200 to about 320, 330, long before the cycle ever began. I've got a chart written, I printed something out and did some calculations on paper, drew some vertical lines, the halving dates, the how many times, it's gone up 20x here. I think it was 20x here, then it was 8x, then it was 6x. So I trimmed it down to, 3 or 4x, and that was my prediction. I still have it on paper in my garage, posted on the wall. The prediction was $335,000 for this cycle peak, and this was long before even the halving, right? This is the kind of, nothing can be predicted for sure, right? This is not financial advice, as everybody says, but if you really go through this historically, you can get pretty damn close to at least a personal prediction. And I highly recommend that you guys do something like that, because it'll help yourselves learn about the biddy. I also suggest, if you're not accustomed to, first of all, HODLing is the way to go, right? Buy the biddy, dollar cost average into the Bitcoin. Excellent investment strategy. If you want to learn about the exciting part, you want to day trade, you want to check this stuff out, you certainly can. Take a couple bucks, take 1%, maybe up to 5% of your total. Let's say if you got $1,000, take $50. Right? Maybe take $100 and try your luck on some day trading. There's a lot of very, very volatile coins that are going up and going down and going up and going down. And the idea is you want to buy it on the low. And when I say up and down, I mean up and down daily, right? I've been playing Pudgy Penguins, and I've been playing Graphane. Now, I do expect that both of them, especially Graphane, to pump like a mofo. But until then, it's been going up and down and up and down and up and down. So I just basically buy it on the low. I wait for the price to go up. A day, 2 days, couple days, even if it takes a week. Last time it took 2-3 weeks. I didn't, sell saying, oh man, now I have no liquidity. No, I held. The price did eventually go up. I sold it at the top or very close to the top. I let the price go down. I bought in again. The price went up again. I sold at the top. The price went down. I waited. I bought again at the bottom, and so on and so on. So you can teach yourself that ultimately is the trick to day trading. If you're new to crypto and new to investing, you're probably not going to win, I should say, with day trading. You really have to look at the volume. What you're really looking for is is there support, right? Is there support for a certain coin? As the price goes down, let's say it gets to this point, suddenly people start buying in, and you see what I mean by is there support is the price will start to go up and go up quite a bit. It's hard to time it right at the very, very bottom because, you don't know when it's going to turn and go up. If you buy at the very bottom and it keeps going down, well, then you're stuck waiting again, right? The idea is there's going to be this point where, let's actually check. Let's find Pudgy Penguins. All right, and if we take a peek here, see, this is just one day, right? So you buy at the top, you sell at the top, you wait for the bottom, you sell at the top, you buy at the bottom, you sell at the top, you buy at the bottom, you sell at the top, you buy at the bottom, you sell. So you can see what I'm talking about, right? Maybe you're not going to make a killing. Maybe if you're only throwing $100 or something at it, you're only going to gain, 10, 20, $30, a little bit at a time. But it won't take long if you play these correctly, and if you wait for the support to take hold, when the price goes down and you see that there's lots of support, lots of people buying, and everything's starting to go green, and you buy in right down here again, you can very well do okay doing this up and down. And, within a few days, within a couple months, ideally, you end up with double your money. Then you can take that, $200 that you've doubled and maybe double it again, right? Then you're up to 400, then 800, 16, 32, and so on and so on. So I do this more, not as much to make money. Look, we all want to make money. This is why we trade. This is why we're in crypto at all. But I do it more to learn about the markets and learn about trading, and I think it's a good experiment for myself, and it might be something that everybody might want to give it a shot. But again, do not put your frickin' life savings into something like this. Start with a very, very small percentage, whatever that small percentage is to you, and you'll end up learning a thing or two. You'll end up learning a lot about taking advantage of the markets and looking for that support at the bottom. Once it's, in the case of this Pudgy Penguins, it's pretty cyclical. Like if we go into a month view here, you can see it's pretty damn similar over and over and over. There's the bottom, there's the top, there's the bottom, there's the top, bottom, top. Bottom went a little lower here, but the top is very similar, and the bottom is very similar. If we put the marker right here, it's almost like the bottom is 13 cents. Pretty consistently. This is what I'm finding too. I'm kind of buying in at 13 and a half. Seems to be the number I keep buying in at, and I keep flipping it at about 15, and this big peak here at 16, I think it was up to 17 actually. So, and here we are again, back to this 13 and up to, so it's only a 2 or 3 cent difference in price, but that's 15-20%. So, and if it keeps doing that, 20%, like this adds up. And if you find yourself kind of a winner where this kind of thing continues to happen. Graphene is one that I'm very bullish on in terms of one of the AI infrastructure coins. A lot of the coins are going to start using this for their infrastructure. So you see that the price here was 65 cents at one point. Well, in my other chart, it shows 65 cents, I believe, 64 cents. And now the price is complete shit, right? It was down to here, 2 cents. And at this point, I was like, yes, I am buying, right? I knew this thing wasn't going to sit at 2 cents forever. But I also, in my other little account, the one I do the same with the Pudgy Penguins, I also have been playing this. So I've got, I wouldn't say a huge bag, but a reasonable amount of graphene that I'm very bullish on, and I'm really thinking that this is, forget 64 cents, this I'm thinking is going to go up 5x or even 20x from its old all-time high, in my personal opinion. So that could get it up to $2. And if I'm in at 2 cents, or even if I'm it's not too late, even if you're in at 10 cents here, it's a big freaking jump, right? But if we go into the month here, you'll see it's another one of these kind of easy plays. Fine, the price is going down and down, but look at all these plays in here in the meantime, right? Price up, sell at the top, wait for the bottom, sell at the top, buy at the bottom, sell at the top, buy at the bottom. It's not as easy to read as the Pudgy Penguins, because this one, there is quite a bit of fluctuation. With Pengu, it's, this is the kind of stock or coin you want to really look at. And look, Pudgy Penguins, how much cuter can you get? I even created some of my imagery there for my thumbnails on YouTube as, my own Pudgy Penguins. And when I saw the result, I, created it even pudgier, right? But you see here in this kind of setup, let's go to the 7-day. Look at this number here. Look at the bottom, right? Like bang on 13.5 cents, like all the way across. So this is a 7-day chart. If we go into the month, it's similar, but really when you go to a 7-day, you can see where the bottom's going to be. You can almost see anyway where the top's going to be. It's almost the same every time, around 14 to 17. The bottom is look at this, every single time is at this 13.5 cents, 13 cents around here. So you can play it, right? Play it, double your money, triple your money, quadruple your money, and you get the satisfaction of learning how the markets work and getting that self-satisfaction that the markets aren't going to screw you, right? You're not going to be that person who buys at the top and then the price goes down and you're like, fuck, I bought right at the very top. Well, you'll know that, okay, if I hold it for enough time, that top is going to come again. But you don't want to be that guy who's buying it at the top regardless. You want to be the guy buying it at this 13 cents, because eventually, if you wait long enough, it's going to come right back to this 13-cent level. Then it's going to flip up. You can just look how many times, this is 7 days, look how many times you could have flipped this thing. And that's exactly what I'm doing. Literally in 7 days, I've probably traded it this many times, right? 1, 2, 3, 4, 5, probably about 7 or 8 times. Bought at the bottom, sold at the top. Bought at the bottom, sold at the top. And, in a week, I've almost doubled my cash. right? Again, I didn't put much into it because I'm not going to risk my, substantial life savings on a frickin' meme coin called Pudgy Penguins, right? It's the cutest thing ever. And, if you tell your girlfriend or wife, if they're ever mad at you, just, bring up the name Pudgy Little Penguins and they won't be mad at you anymore, right? Let's face it. You draw out a cute Pudgy Penguin, everybody's going to laugh. I've yet to say the word Pudgy Penguin to anybody without them saying, oh, what is that? That's the cutest thing ever. Show me, right? So, as cute as it is, I ain't putting my fucking life savings in this shit, right? Even if it's expected to pump, it's expected to go way up. Pudgy Penguins, I expect big things for Pudgy Penguins. I keep hearing online, and all these crypto guys, these so-called experts. But I'm not doing it. I'll play it from this 13 cent to this 17 cent or 16 cent kind of scenario. And again, if you're going to do this, you buy it at, at least this week, this was the pricing, right? 13 and a half cents. And the highs are around 14 and a half. In this case, it went up to it did go up to 17. I didn't sell at 17. I got out at 16 because I probably read this right here. See this dip? And I was like, okay, well, there's no more support anymore. The price is starting to come down. I've made my 15% time to jump. The price continued to go up. Did I cry? No, because I had bought down here, and this is all gravy all the way up, right? Even when you buy at the bottom, you don't have to get out way at the top. Ideally, you do, of course, but even if you get out, 3/4 of the way up, you're still in the profit. If you buy it up here, let's say at 16 cents, you're expecting a lot. That's taking a big freaking risk in hopes that it's going to go up, 1 penny. But if you bought way down at the bottom, and it's the same as the, graphene, and quite honestly, any crypto, you want to buy that shit when the price is down here. Look at all this opportunity. People had to buy it, for months. It was down to 3 cents, 2 cents, 2 cents, 2 cents, 2 cents, right? But what happens with the psychology is people don't want it because they think it's garbage. But if it's a coin that has utility, a coin that that is going to be desired, right? You buy it at the bottom. Let's go back to the biddy, and this is the best play of all, right? You don't look at what's going on today or tomorrow. You want to be buying this way down here. In fact, let's zoom out even further. This is where you wanted to get in for this cycle right here. This was a year, and I've already calculated a year and 1 month after the cycle peak. The price here for Bitcoin was $16,000, right? If you had bought down here, do you really care what happens? Do you really care the price goes up? Oh, the price dipped 20% in this area here. Oh, while everybody else is buying it right here, and they're panic selling because the price goes down 20% in a day and they're freaking out. You're already in here. When people are buying it up at this level, and again panicking, oh my god, the price is down 30%, Trump tariffs, this shit, right? Media garbage. You don't care because you're in at $16,000 when people are buying up here at the current prices and the price plummets and everybody's freaking out and selling and losing them. You don't care because you bought at $16,000. You and I, folks, we're not these. I'm not this world-class investor dude. I need to take advantage of the bigger picture. And when you do that, you can't lose. You're buying right as much as possible on the low. And then at the cycle peak, you're selling off at, we're not at the cycle peak yet. I expect it's going to be somewhere up here, but we can use the last 4-year cycle. And in that situation, you would have bought the halving was in 2020. So the previous cycle low would have been right in here about a year and 2 or 3 months after the last cycle peak. So let's check if that's accurate. So 2016 was the halving before that. 2017 around November, December is generally the cycle peak, and there it is, December 26th. According to this, the December 19th cycle peak at $17,000, and then a year and 2 months is my kind of analysis on the last. So that was 2017 December. So let's go to 2018 December or 2019 January, and there it is. January 2019 cycle low, $3,443, right? If you bought in here, it would have been the same thing. While everybody's freaking out, oh my God, the price is going up, yeah, and then they're freaking out here because this big dip, and it's in the news, and people are losing their shirts, and stupidity because they don't want to hold on to this thing. They don't have a long-term initiative. You're just sitting back. Who the fuck cares? I bought it at $3,500, and when it gets to the cycle peak, because we know historically it's around October, November, December, the year after the halving. If you bought at $3,500 and you flip it at $70K, you did all right. So this is the best case scenario on a long-term horizon. I do suggest a long-term horizon, kind of this HODL situation. Warren Buffett, he was quoted as saying, they asked him, what is your time horizon for holding stocks? And they said, well, he answered, there's the regular day trader who's, buying and selling in a few hours or a few days. There's the savvy investor where they're holding stock for 2 or 3 years. And then for me, my time horizon is forever, right? And I get what he was saying in that quote, because why, why would he sell, right? Especially if you kind of bought here and you completely screwed yourself. Let's say you bought way up here. The price went, you bought at 50 grand. The price went up to, 60, 70,000. You didn't sell because, you thought you were going to make more, or you were out of town, or you weren't watching. And remember, folks, the shittier the coin, the more you need to watch this thing. Like if you think, okay, with Bitcoin, fine, you put your money in, I guess long-term play, fine, you should be okay. Look at it again in 10 years. And you're almost sure you're going to make money. If you want to trade it a bit and use the cycles to your advantage, you try and buy, a year and a couple months after the cycle peak, and then you flip it October, November, December, the year after the cycle peak, right? And then you buy it on the low again. This is a good scenario. This is assuming these very, very cyclical patterns continue, right? And it's hard to say if this is going to happen or not. So far, it did happen for all of the halving. It's every 4 years, 2012, 2016, 2020, 2024, right? So far. The next one's 2028. It's hard to say if, history is going to hold true and if it's going to be exactly the same thing. Very difficult to say. But what I can tell you is if you bought it way up here, the price goes up and you fucked yourself and you bought it at the price that was way too high and the price went down and the price went down and you're like, you were on vacation or something, you didn't watch this thing like you should have been watching. Don't do this panic selling crap. Like if you can get out anywhere near the top, perfect. If you think that you're going to get out at exactly the top of the cycle peak, you're bullshitting yourself. But if you got in at this low price, it doesn't matter where. If you sell anywhere above this line, you're laughing, right? If you screwed yourself and you bought it way up here and you didn't flip it and then suddenly you're at a loss, well, a good play on that is you wait around and then you double down on it, right? When the price is into the cycle low, you can then buy twice as much, right? And then your average cost comes way down. Ideally, though, you flip it at the top, you buy it again at the bottom, you flip it at the top, you buy it again at the bottom. I don't know if this cycle is going to be different or not. Personally, that's how I'm playing it. And I already showed you how I'm playing Pudgy Little Penguins. And I'm doing that, daily. And I'm watching it literally every hour, right? I'm not that, even though it's a small amount of money, it's so volatile that you need to be on top of it. Like, as I mentioned, the shittier the coin, the more of this up and down you're going to expect. The more solid the coin, with Bitcoin holding almost 65% of the total market cap, this is going to have stability. This is likely not going to be going up and down the way the little shitcoin, meme coin things are, right, on a daily basis. Sure, it's going to go up and down a little bit, but, it's more of a long play. Pudgy Little Penguins, and whatever, if you guys have any good recommendations for other shit coins that you can also play that are up and down quite a bit consistently using the same bottom and the same top like I showed you in the Pudgy Penguins, by all means feel free to throw it in the comments. Shout out to Billy Grande. Good morning, Nick from Greece. Wow, buddy. Beautiful place there. I love watching all the news about crypto from this site. Thanks. Much appreciated. That means a lot. Let's give you some love back. Thanks again, Billy Grande. Folks, if you haven't, make sure you subscribe to the show. We do this every day, and I like to think that we have a lot of fun doing it too. I try as much as possible to give some kind of additional financial literacy to everyone watching. You can never get enough, and it's important to know a little bit, a fair amount about money, and that way you start to take advantage of the banks and you start to take advantage of the systems legally and within your means and within the system, and they're not taking advantage of you. It's super important in today's day and age to have, some kind of financial literacy. I've got a great list of books in the show notes down below. I suggest they're all free. I've got the YouTube free links for all of them. I suggest you guys check them all out. I've got them in order for a reason, and ideally you listen to them in order, but if one piques your interest quite a bit. So Cabby81, you had me at burr. Yeah, money printer go burr. It's gonna happen, and that's gonna drive the Bitcoin price up. That's unfortunately, it's also gonna drive people's fiat money down. Right, the more money that gets sent out into society, the less your money's actually worth. So that's actually the number one driver of inflation. So for Bitcoin, money printer go burr is a good thing, but for your fiat pocketbook, and in probably most people's situations, they're getting paid in fiat money. It's getting worse. Worth less and less and less. That's why you're seeing things like eggs. The price is way up, and people think it's inflation, and eggs are maybe a bad example because they Biden killed like millions of birds because of the chickens because of some bird flu. But let's say the price of anything is up. It's not necessarily because of tariffs or because of inflation, or because they're costing more. It's because the value of your money has gone down. So something that maybe cost $10 before, if suddenly there's twice the money supply, right? The money printer kept printing and printing the thing that cost $20, and now there's twice as much money in the system. Well, that thing that used to cost 10 now costs 20 automatically. Bitcoin is the exact opposite. As more fiat money gets printed, Bitcoin automatically gains money because there's hardly any Bitcoin that gets created. Let's go. That's why I am all about the BTC. Yeah, I love it, Cabby. I agree 100%. Yes, because once the money printer turns on, your fiat money is turning into garbage. But the Bitty is going the opposite way. The Bitty is even more lucrative and worth more. If there's twice as much money in the system being printed, then you can expect that Bitcoin is going to then be worth twice as much, right? Eggs and meat and bikes and whatever else you're interested in buying aren't the only things that get affected by inflation. Bitcoin also, you can expect that it's going to double. If the money supply doubles in fiat money, then the price of Bitcoin should ultimately be worth twice as much as well. Folks, I'm so happy everybody joining. Warms the cockles of my heart. If you have not done so, please do subscribe. I am on a path to have over 500 subscribers by the end of the year, and I can't do this without all you folks. I will continue to scour the internet and the world to find you the greatest stories in crypto every day, so you don't have to. We will try to instill some financial literacy in every single one of our good folks watching every day with something different. Again, please go through and read, listen to these books. A good time to listen to these things is while you're driving to work. I used to listen to the same playlist every day, right? Now I listen to a different book every week. You're doing two things at once, and you're really taking advantage of your time. Time is more important than anything because time is scarce. There's $900 trillion of assets in the world. Go out and get some of those, but remember that time is the most scarce asset of all. Spend less money than what you earn. If you suddenly start making more money, start saving more money. Don't start spending more money. Of course, treat yourself a little bit, but if you start making more money, that means you can invest more, right? And have more for your future. And start investing when you're young. ideally when you're 18 or 20, and hopefully you can retire when you're 40 or 45 in your prime, and not when you're 65 or 70, when you can't even do the things that you really want to do at that point because of your health. If you've got a great idea, start that idea today. Don't say, oh, I'm not ready. Even if you're not ready, start with your idea and things will come together for you. Again, folks, please do share, like, comment, and subscribe. So happy everybody joined, and we will see you on the next stream, folks. Have a great night.